Good morning. You cannot be sure whether the nationwide Bharat Bandh was a successful story or not. The markets remain dull and the story will continue today. The Nifty opened on a flat note yesterday amidst mixed global cues. However, an attempt to sustain above the levels of 5,240 turned out to be in vain during the last hour of trade. The UPA has made it clear that it is in no mood to opposition pressure on the issues of fuel prices. But the fact remains that the inflation is a major issue and the government needs to take concrete steps to curtail the same, and mere ad hoc measures will not help. The monsoon may have softened the blow on inflation over the coming months, but in the near term, one has no option but to endure the pain. Back to the markets, we expect a slightly lower start. With the US markets shut for Independence Day and the world markets still sluggish, the key indices may remain sideways. The NSE Nifty is likely to swing between the range of 5,200 to 5,350 in the near term. Non-index counters may remain abuzz, but one should deal with this space cautiously. One key concern is that the FIIs have turned net sellers in the past couple of sessions. The results will start pouring in from next week. IIP data and monthly inflation are another key events to keep an eye on. TDSAT has reserved its order on a plea by GSM operators against the recent hike in the spectrum charges by DoT. The Agriculture Minister has proposed to approach the government towards decontrolling the sugar industry. The government has proposed to launch an urban employment guarantee scheme on the lines of NREGA and give statutory sanctions to minimum wages. The capital employed numbers provided by 661 companies for the year ended 31st March 2010 show an increase of 12% over the year. The Finance Ministry expects the headline inflation measured by the wholesale price index to climb down to 6% by December, lower than the 10.16% level seen in May. The government plans to expand the basket of subsidized food items supplied to the poor by adding edible oil, sugar and pulses to wheat and rice, which is provided currently. Reliance Industries' daily crude oil imports fell by 23% in May due to a planned shutdown of a secondary unit. Indian Bank has raised 5 billion rupees through bond issuance. Communications Minister A. Raja has proposed free spectrum for BSNL and MTNL. Network 18 Media and Investments Limited plans to simplify its corporate structure and cut the number of cross-holdings in the group. SR Energy is close at buying Navbharat's power project in Orissa for 2 billion rupees. Havells to launch its Sylvania brand in India. Moving on to the recommendations, the technical calls are a buy on Bombay Dine. Traders are advised to buy the stock above levels of Rs 497 with a stop loss placed at Rs 487 for a target price of Rs 520. And a buy on Federal Bank. We advise buying the stock above levels of Rs 333 with a stop loss at Rs 327 and for a target price of Rs 346. Moving on to the derivative strategies. Short Reliance Power July future in the range of Rs 182 to Rs 183 for a target price of Rs 174 and a stop loss is to be placed at Rs 186. And short Ashok Leyland July future in the range of Rs 65 to Rs 65.50 paise for a target price of Rs 62 and a stop loss is to be placed at Rs 66.50. Thank you and have a great day ahead.